Hi everyone, let's have a look at my low time frame and medium time frame Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we're looking for a corrective structure to the downside in an ABC, followed then by another ABC in blue over here, which is another 5-3-5 wave move to the upside, where then the most common target is between the 1 and the 1.236, which is, if we adjust it to the current price section, between 27.5k and 28k. Now in this scenario, this yellow wave C over here is very short in time, and yes, it can be possible that a wave C is very short and very high volume, but usually a wave C takes a little bit longer in time, and as you can see, this move is clearly shorter in time compared to this wave A. And if we now look at this structure over here, well, the invalidation of this blue ABC to the upside is if price is going to take the low right here, and we have an ABC where if we take the Fibonacci targets for this being an ABC, pulling from the high to the low of A to then this high over here for potentially wave B, you can see that the blue Fibonacci's over here is the most common target area for then this ABC to the downside, but you can also see my white target box is stopping at the invalidation level because we don't want to see price wick below. Now price did close multiple candles below the 886. If I move however to the 4-hour time frame, you can see that there's no candles yet closing below the 886, so that's something to hold on to at least. But as it stands now, when looking at this to be a potential 5-wave move to the downside in a wave C, then at the moment this looks like a 1, 2, 3, 4, and still expecting maybe one more low to be made minimum for then still a bullish scenario to the upside. If we then go to the second potential bullish scenario, then this is still a 3-wave structure to the downside, but then not the wave C ending over here, but it ends over here with this first move to the upside being an ABC structure, an expanding flat, which is very extended, which is also the reason that in the past couple of days, this was an alternative scenario, like the more bearish scenario, let's say, extending all the way to around the 3.618 for then a first structure, like a 3 structure to the upside, potentially then seeing another 3 to the downside, followed then by another 3-wave move to the upside, and then potentially a WXY scenario, where in this scenario, this is not the invalidation anymore because now you actually want to see price soon moving towards the upside. The most common target area for wave C in this scenario can, however, be taking these lows in this particular scenario. This is a 3, 3, and then another 3-wave move to the upside, so a WXY, where then price could potentially move to the 1.236, just below this wave B, then move in 3 waves to the upside to take the liquidity of the 2 highs that we have over here, high number 1, high number 2. If we go to, however, the more bearish scenario, then what we're looking at is this as a 5-wave move to the downside. So a wave 1, 2, 3, 4, and then a wave 5 to the downside, where wave 5, this wick over here, touched the 1.618, which is a common target and also usually a minimum target for wave 3. So that is nice. Alongside wave 4 and then eventually a wave 5 to the downside, where this wave 5 is also extended. And that's something you don't see every day, that a wave 3 is extended as it hit the 1.618, and then you have a wave 5 being long as well. So unless you would say like, hey, wave 3, the 1.618 is a normal target and not an extended target, because if we actually pull the Fibonacci's for wave 3, you will see that the extension targets for wave 3, it can extend much further. So over here you then have wave 3, and then you see that the wave 3 hit the 1.618, but extension targets go much further, but the minimum target is the 1.618. So we could also say like, hey, wave 3 hit its target, not necessarily extended, but the minimum target for wave 3 and the most common one for then 4, and then getting an extended 5th as this wave 5 over here went past all the normal targets for a wave 5. And if we actually measure an extended wave 5 target, it also didn't reach it. So from the high to the low of 3 to the high of 4, you take the fib, and if we then put this on a wave 5 extended target over here, then the 1.618, put it quickly on log as I'm on log actually, is all the way down here. This is the extended target for a wave 5. Now it doesn't have to reach the 1.618, as the extended target for a wave 5 is basically longer than the common targets for a wave 5, which is the case in this scenario. And then we had a very quick short move towards the upside, and then either a wave B or a wave 2, of course. In an even more bearish scenario, this is a 1, 2, and then a bigger 3 down. But in at least the more, but let's say, bullish scenario, we go to the medium time frame in a second. This is then a wave A, potentially B, and then a C. What I don't necessarily like about this, like wave B, is that this wave B is incredibly short in time compared to this longer 5-wave move to the downside in a wave A. You can see how long this wave A has taken compared to this short wave B. But nonetheless, it is possible. It's just following time rules, fib time over here, and fib time taken from the beginning of A to the low of A. You can see the 0.382, like usually a minimum target for a wave B. If we quickly put it on the 0.236, for example, as well, then you can even see that the 0.236 is not even reached. So personally, preferably, it would be quite nice to have another rotation to the upside before a move to the downside. But of course, this is quite a high volume move towards the downside, so we have to wait and see if price is going to continue dumping or not. But even if we take these lows over here, for example, following like a potential, even in a wave B and A, B, C like this, it would be nice to see that rotation to the upside and then to the downside. As in the then medium time frame scenarios, we have two potential things going on at the moment. So on a medium time frame, the green count is the higher time frame count, and then a WXY, which is a 3-3-3 scenario. And then this wave Y, that's of course what it is all about at the moment. So this is then the first structure to the downside in either the yellow or the blue count. Now the blue count is an expanding flat count, so that is a over here a wave A, followed then by potentially a wave B, for then a wave C to the downside. So they have an A, B, C, or actually you have a 3, 3, and then a 5-wave move to the downside over here. That's for an expanding flat. If this is a 5-wave move, then it is a 5, potentially a 3, where then the actually blue B is going to be over here. And then you have another 5-wave move to the downside. So a 5, 3, 5, if we can make this be a little bit longer. So we have to wait how that goes. And in the yellow count, wave B is then already in. So you then have a 5-wave move to the downside, that sharp 3-wave move in a wave B. And now we're already looking for another move to the downside. So basically on this medium time frame, if I quickly make it simple with only one count, we have this as a 5, 3, and then a 5-wave structure, where the most common target for wave C is between these fibs, the 1 and the 1.236, which is between 24.4K and 23.8K, taken from the high of X to the low of this A to the high here of wave B. Then the other scenario is that wave B is not yet finished. That is what I prefer. Even if we take these lows, it would be nice actually to see a rotation to the upside. The invalidation is taking this high. And then this being an A, then we have a 3-wave in a B and then a wave C to the downside. And we have the potential expanding flat target, where if this is an ABC scenario, not a 5-wave in a 1, 2, 3, 4, 5, but an ABC, then this can be still a wave A in a 3-wave structure, followed then by a 3-wave structure to the upside, where potentially the high of X could be taken, and then another move towards the downside. And then you're creating an A, B, C, 3, 3, 5-wave move to the downside. And then finally, the CVD divergences. Very, very interesting, of course, as now the CVD has played out. We had some bigger bearish CVDs over here. Now, the bullish one didn't play out. We actually just missed out, as you can see, on hitting the green bar, price moving to the downside. The bullish one is now invalidated, so we can remove it. And the bearish divergence played out. We had a more local bearish divergence, lower high on price, higher high on the CVD. Bearish divergence target was this low. Now, clearly played out. And then we have this bearish divergence here as well, from the high to this high over here specifically, also playing out as we took this low, and we even went deeper than that. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing. I'll see you at the next one. Bye bye.